Myself, Dr. P. Karthika, Assistant Professor, PG Department of Commerce CA, Vellalar College for Women, Autonomous, E-Road. Today, we shall see the topic is types of audit. Before seeing the topic, let us now see what do you mean by audit. An audit is the examination or inspection of various books of accounts by an auditor, followed by physical checking of inventory. Next one is types of audit. There are many types of audits are there. Let us see one by one. First one is on the basis of legislative control, the audit may be classified into three types. First one is statutory audit and government audit and private audit. Second one is on the basis of relation of auditor with service management. Audit can be classified into two types, external audit and internal audit. Then next one is on the basis of periodicity, audit can be classified into four. First one is continuous audit and second one is interim audit and periodical audit and occasional audit. Next one is fourth one is on the basis of subject matter, it can be classified into financial audit, operational audit, cost audit and management audit. And the next classification is on the basis of coverage of audit, it can be classified into complete audit and partial audit. Next one is on the basis of manner of checking, audit can be classified into standard audit, balance sheet audit and post and vouch audit. Let us see one by one. First one is on the basis of legislative control. First type is statutory audit. Statutory audit is compulsory audit prescribed under statute, that is law. In this type of audit, the rights, powers, duties are laid down by statute, that is law, which cannot be altered. In India, the accounts of joint stock companies, banking companies, insurance companies, cooperative societies and trust institutions are subject to be followed this type of audit. And then second one is government audit. A separate department is maintained by the government of India known as Accounts and Audit Department. This department is headed by Comptroller and Auditor General of India. This department works only for government officers and departments. This department cannot undertake audit of non-government organizations. Its working is strictly according to government rules and regulations. And then third one is private audit. In this type of audit, there is no statutory or constitutional compulsion to get the accounts audited. For example, sole proprietor and partnership firms get their accounts audited without compulsion. The next one type is on the basis of relation of auditor with service management. Audit can be classified into two. First one is external audit. External audit is a type of audit performed by an auditor outside the business organizations. Normally, external audit are conducted by qualified chartered accountant. Qualified chartered accountant are appointed as external auditor. Then second one is internal audit. It is a type of audit conducted by own staff of the organizations. It is done to verify the reliability and the authenticity of financial accounting. Next type is on the basis of periodicity. First one audit classification is continuous audit. Continuous audit is conducted throughout the year or at the regular short intervals of time. There are some advantages in continued audit, such as easy and quick recovery of errors, to gain knowledge of technical details, quick presentation of accounts, and keep client staff regular. In spite of certain advantages, there are some drawbacks also there in continuous audit, such as the chance of alteration of figures, expensive one, and queries may remain outstanding. Then second one classification is interim audit. When an audit is conducted between two annual audit, such audit is known as interim audit. Interim audit may involve complete checking of accounts for a part of the year. Sometimes it is conducted to enable the board of directors to declare an interim dividend. Interim audit may also be for the purpose of dealing with interim figures of sales. And then third one is periodical audit. Periodical audit is one which is taken up at the close of the financial or trading period. Periodical audit commences before the final accounts are prepared and continue till the audit is completed, even after the close of the financial or trading period. This type of audit is sometimes called complete or detailed audit because each and every transaction is seldom checked in big business house. This type of audit is satisfactory, especially for small concerns. Then last one type is occasional audit. This type of audit is conducted once a while whenever the need arises and the client desires it to be carried out. This is possible only in case of sole trader business or partnership business. And the next classification is on the basis of subject matter. Then first one is financial audit. Financial audit is the examination of financial statement to express opinion on the truth and fairness of financial condition and operating results of the entity. The statutory or external audit is generally financial audit. And in second one classification is cost audit. Cost audit is the audit of cost records of the company. It is checking of cost accounts and costing techniques, methods, system followed by the entity. The cost audit seeks to verify the truth and fairness of cost of production of goods or rendering of service by an entity. Then next one classification is operational audit. Operational audit is review of operations of an entity. It is generally carried out by internal auditors. It involves intelligent examination of various operations of functional areas of the business wise production, marketing, stores, and also cover observing weakness, lapses, inefficiency in the operations and suggesting the way to strengthen the system and improving efficiency and profitability of the operations. And the last one audit is management audit. Management audit is critical review of policy and practice of management. It involves a review of various processes of management. For example, the audit involves checking of objectives for their relevance, the examination of organizational hierarchy, authority, responsibility, relationship, and the quality control technique, etc. Then next one classification is on the basis of coverage of audit. Then first one classification is complete audit. In complete audit, there is no restriction placed on auditor in the matter of coverage of audit. The auditor check up all the books of accounts with connected records to express the opinion on the financial statements. The statutory audit is an example of complete audit because the client cannot put any restrictions with regard to coverage of audit. The next classification is partial audit. In case of partial audit, usually the areas to be covered in audit are delimited by specific agreement to this effect. For example, the auditor may be asked to carry out the cash audit alone to ensure that there is no falsification of cash accounts, or the auditor may be asked to check only the purchase effected during the particular month when the proprietor suspects certain irregularities during the period in the respect thereof. The next classification is on the basis of manner of checking. Audit can be classified into three types. First one is standard audit. The accounts are thoroughly checked and analyzed, and appropriate test checks are applied to other items provided there is a good and effective internal check-in operation. Then second one classification is balance sheet audit. Balance sheet audit means verification of the value of assets, liabilities, the balances of reserves and provisions, and the amount of profit earned or loss suffered by a firm during the year. Then last classification is vouch and post audit. Vouch and post audit is that where the auditor checks each and every transaction right from its origin in the books of prime entries till they are posted. This system of audit has become obsolete in case of large firms because the number of transactions are in millions. The auditor relies on the examination of some of the transactions scientifically, that is selected at random. Thank you.